Good afternoon. It is Monday, the 5th of March, 2012. This is Brian Shannon from Alphatrends.net speaking. Let's take a look at this market here. You can see on this daily time frame of the S&P 500 that we're still in a very nice uptrend. However, when we drill down to a shorter term time frame, we can see that the trend line that we've been following, and a lot of people, other people have been observing as well here, was broken today. On Friday, we were talking about the weakness in the Russell 2000 and how the more tests of this trend line and the fact that they were becoming more frequent was giving us reason to be a little bit cautious and that maybe it would break down. Well, obviously today we did break below that trend line, and our first level of what was to be supported about 136.75 right here. So we're kind of flirting with that level. These are pretty much the lows for last week, but we are below the declining 5-day moving average and closed below that trend line for the first time since this trend was really established with that gap up on December 20th. So when we back it out to a little bit longer picture on the daily time frame, we did of course get above the highs of last year, or 137.18. In fact, I believe this year's highs are 138.18. And the significance about that 138 level, if you remember as well, I did a blog post on this last week, was that was the target for this inverted head and shoulders pattern. That is, you take the height of the head to the neckline, and we'll just draw two of these lines here, and what we'll do is we'll grab one of those, and what it does is that gives us basically the height of the pattern added to the breakout point, gives us our upside target, which in this case was roughly 138. And you can see here, if we just kind of draw a horizontal line right across there, that's in fact where that line comes in. Now that upside target has been met, objective has been met. It doesn't mean the market is going to cave in from here or reverse, but the signs from the market, what the market's telling us when we listen here, are that the uptrend has slowed. Now we've got a more important level of what should be support down at about 136. If we can hold above that this week, then maybe we're going to get away with a little bit of a time correction, and we come down and test that rising 20-day moving average. If we take a look back at the daily again, you can see we've been holding above that 20-day moving average for this entire rally as well. Right now, the 20-day moving average is sitting at about 136.06. So maybe that comes into play because it is a prior important level of a little bit of resistance and support. I'm really calling out about 135.80, and I wouldn't mind seeing the market break below that 136 a little bit this week. So we got to start out the week with a little bit of caution with the longs. We did gap lower today, sold off a little bit. We tried to recover, but then the real sell-off came, and the market got some stabilization down near daily S2, which is why we watch those levels. But it's not considered broken yet. The light has gone from green to yellow in the S&P 500 for the intermediate term. The longer term trend still intact, still in an uptrend. Nasdaq was down a little bit worse, down 1% today, but also holding some key levels in here. Let's take a look at that 30-minute time frame. The 64 level, 63.80, that's really kind of a bigger level for this market. And then of course that $63 is in a prior important level as well, not only as resistance but some intraday support back here as well. This Nasdaq hasn't even come down to its 20-day moving average yet this year, which is at 63.50 about. So I wouldn't be surprised or concerned if this market got down towards that 63 level, and I think it's realistic to think that that's a high probability for this week. What would change my mind is if we got back above this 5-day moving average, and and that 5-day moving average was flattened out. But for now, the intermediate, short to intermediate term, and I realize everyone has different definitions of what they consider short term. You might be looking at a 1-minute time frame and saying the long term trend is the trend of the day, and you're in there scalping for 5 minutes at a time. But basically what I'm talking about in terms of the short to intermediate term time frame is the trend of the last week or so, basically. And you can see that we're breaking down a little bit. We've got this trend line in here that comes off of the February, so the trend within the trend. Here's our bigger trend line from the beginning of this rally, and we're right on that. But if we draw these other trend lines that this one kind of runs parallel with it, you can see we broke that today as well. So looking like a pullback down towards 63 would be reasonable and healthy for the the Nasdaq. Now the Russell 2000, as we know, had been the laggard, and this market was trading between that 81 and 83 level. Last Thursday we saw that it found some resistance at the declining 5-day moving average, and then broke down through support at the 81 level. So again, we're going to need to recapture 81 before you can kind of look at this as being clear to that everything's okay again. We are above a rising 50-day moving average, so the longer term trend I think is still intact, but this could end up being just a shakeout. If we get back above 81, then we could see maybe from this failed breakdown that a fast move comes higher. But that's trying to guess too many steps in advance right now. What we want to remain focused on is really this 81 to 81 and a quarter level. If we stay below this 81, really to 81.40, I guess. If we stay below that level, then I think it's still, you want to treat this thing very cautiously. And if it gets back above there, however, then I think that these sellers in here are going to get squeezed higher and possibly lead the way to further upside. So don't give up on this market. That is the Russell 2000, but be aware that this short to intermediate term trend, we do have lower highs and lower lows below a declining 5-day moving average. So intraday, I think you want to stay. Especially if we're below a declining volume weighted average price. And the Russell didn't do that. In fact, most of the day it was above a rising volume weighted average price. And it got up to but not quite through, the 2-day volume weighted average price. And in this case, the 2-day volume weighted average price is important because that's the day that we saw this market break down through the support level. So we'll kind of keep an eye on that moving forward as well. The semiconductors, as we know, we were very cautious about this group because, first the Russell broke, and we saw that the semis, they've just been kind of hitting away at this 34 level, and we had the lower high in here. We saw that this market was below the declining 5-day moving average on Friday, and I think we said that there looked like a good pullback, probability rather, of a pullback that would break the 34 level and perhaps down towards the 50-day moving average on that daily chart. You can see we came actually pretty close to it. The 50-day moving average being at $33.13. We made a low intraday of $33.38. So I think that even if we don't hold precisely on that 50-day moving average, we've got another important level below us at about $32.86. And it actually would be a good idea, maybe if we start getting deeper pullbacks in these markets, to start looking at some Fibonacci levels in here. So for instance, if we just clear these lines off and we take a look at the semiconductors, and you can see how easy that is to draw those lines in with this trend tool here on Realtick. And Realtick is the people who bring you this technical analysis video each Monday. So if you haven't checked out Realtick, go to their site, realtick.com, and there's some sites, some brokerage firms that will give you a free trial to it in that. But it's we could see that 32.90 would be a 38.2% pullback from the beginning of this rally that began in December. So that's another potential level, 32.90. But above that, we've or just right around in that area rather, we've also got this 32.70. So those are some levels to keep an eye on. But short term, we're below a declining 5-day moving average with lower highs and lower lows. So you have to be very careful with this group. The financials actually held up a little bit better than they were down about 0.4%. Semis were down the worst, down 2%, and that's something to take seriously because the semiconductors and the Russell 2000 were leaders on the way up, and now they're both showing that relative weakness. So you do want to take that seriously and think that it's very probable that we are going to see it spill further over into the semiconductors and the S&P 500, and that the S&P 500 would in fact go down and test some of these lower levels, and same with the Nasdaq, and particularly that 63 level. But back to the financials for a moment. We did, as we know, this 1485-ish level has been acting as resistance, and there's been a little bit of a battle fought in there the last 3 or 4 days. Well, we drop back below that and down to the next level that is supposed to be support. And this has been an important level, which is $14.70. For some reason, it's been an important battleground here over the last month and a half. If we break below that tomorrow, I think it's highly likely that we head down towards the low end of the range near that $14.40 level. That would bring us to this point right here, obviously on the daily chart. And you look at it, it still acts healthy overall, but we're getting a little bit of warning signs, and this could be the failed break higher that's going to lead to a quick move down to that 1440. I don't want to talk about yet what would happen if we break that 1440 level, because that's still a decent little percentage movement away from here, and I think it's likely we would at least stabilize in there, but I wouldn't be a buyer at 1440 if we come down to that level, but I do think it should hold at least for a little bit before maybe a test of the 50-day moving average comes into play.